take a quick look at consumer goods in Nigeria. Consumer good companies have actually outperformed the NSE over the last year, and global liquidity top names have really enhanced the valuation of top names on the bourse. To hear more about the prospects for brewers and other consumer good companies, I'm joined in the studio by Ifeoma Nwafor. She's an analyst with ARM Investment Managers. Ifeoma, it's great to have you on our show today. And I see that ARM has put out quite a few interesting ratings for virtually all the companies, and I'm talking about Unilever, Nestle, Nigerian Breweries, Guinness, PZ, Cousins. All sales in your book. Give us your view on why you think the valuations of these companies remain extended today.
Thank you, Wole. Yes, our valuations on these stocks for a while have been, ratings on the stocks have been on the sell side. And that's largely because we believe that recurrent prices don't reflect, fundamentals. The prices have been diverging from fundamental performance. Last year was a challenging year for players in that space, and we expect a modest rebound 2013. And even at that, we believe our valuations, our expectations, for the future are quite optimistic. Despite all that, we still feel prices are not reflective of fundamentals. To get a clearer view of the reason for this, we actually tried to look at several factors or several reasons that we could attribute these recent trends to. I think something to look at, an interesting thing to look at will be at the liquidity. The level of liquidity in the system is quite high domestically and internationally, with all the quantitative easing going on. Yields, really low. The central banks across are trying to stimulate economies. And then again, we ask ourselves, who are those playing in the market? A recent report from the Nigerian, the Nigerian Stock Exchange reveals that about 60%, of the transactions on the stock exchange could be accounted for by foreign portfolio investors.
Right.
And when you consider that these are the largest players, they have lots of liquidity, and then they want an exposure to the emerging market story, the consumer goods story. It's a compelling story, really, and not just in Nigeria. If you look at other markets, you actually see that those sectors are doing well. So if you're a portfolio investor and you want exposure, into the emerging markets, into Africa, you'll be thinking, oh, Nigeria, it's a good story, large population
and these are some
size.
of the companies that they'll be looking at. So the valuations are rich. It's quite obvious at this stage. But give us your thoughts on the fundamental value. Now let's talk about the fundamental story and why you still think that there are still positive stories across board. Because it's very unlikely, in my view, that we would see a major sell-off from these names, regardless of the stretch valuation. So starting with Nestle, your thoughts on where Nestle is sitting in this market right now?
Nestle has done relatively well for themselves, considering performance in 2012 compared to other players in this space. We saw them pull double-digit growth, top line, and margins across board expand. I think what Nestle has had going for them was, or going for them rather continuously even, is the ability to push products into the market. Last year we saw expansions. Over the past 3 years we've seen expansions. So they have increased volumes, and they've been able to push those products out. Discussions with management indicate that they're primarily focused right now on distribution, strengthening their route to market. So we've seen them focus in second and third tier cities, that leaving the core cities and moving to the smaller cities at the side and push products, trying to get to the consumers directly. They also pursue a retail sales driven model, which for them has been working. So they try to reach the consumer directly and see, and at least the results so far have proved that that strategy is working.
It's a very positive story so far. But I think a common issue that many of them have to deal with these days is the insecurity. Of course, over the weekend we did see another manifestation of that with the attacks and the people that have been affected by that, foreigners affected by that. So insecurity right now, how are the consumer companies dealing with this? Because I get the sense that the likes of Nestle, it's not such a big issue for the likes of Nestle, but we have seen the likes of PZ and Unilever come out to say it's something that has impacted their business so far.
Yes, it's something of concern. When we look at Unilever, about 30% of their revenue is from the northern part of the country. And the sense we get from most of those players in that space is, yes, there's a problem. Even from Nestle, yes, there's a problem, but we can't necessarily move out. And that's why they've chosen to focus on the smaller cities and not just the core cities, because most times when you have these attacks, they're in the core cities, there's a lockdown, products don't really move, and then but with focus on the smaller cities, they're actually able to drive products. And discussions with Unilever towards the end of last year, you actually get the sense that they also want to begin to focus on the second and third tier cities. The problems are going to be there, you know, they're still there, they will continue to be there for a while. And I think the key strategy right now is to find a way through it, you know. And the sense we get from Nestle is we will still be there despite all that. And I think that's what the players in that space will be trying to do.
Let's move on to the beer war, if you like, Nigerian breweries and Guinness. Clearly, it seems at this stage that Nigerian breweries seems to be winning the war there in terms of market share. But talk us through how you see those two businesses fundamentally.
For the brewery space, it's a large market. There's a lot of potential, and I think that's why we saw the wave of expansion, you know, that took place in 2011. 2012 was a bit of a surprise. Nobody expected the surprises we saw with the partial removal of the fuel subsidy and consumers trade down, and that actually affected volumes. But we believe 2013 there would be a modest recovery in volumes as consumers adjust their spending habits. Yes, Nigerian breweries seems to have outperformed Guinness in recent times, and to an extent I think that could also be attributed to strategy. You know, Guinness is growing, is expanding capacity organically. Nigerian breweries was much quicker, you know, through the acquisitions. They have a wider coverage space, and I think the route to market is a bit stronger. And then when you consider that the beer market, about 58% of it is lager, and they have more lager brands than Guinness, you know, so you see reasons in a way for performance. But Guinness, you know, talking with management, they're still expanding. They believe the market will pick up, and they're ready to take hold of that market. We're expecting to see improvements, you know, with improving their route to market, improving distribution, and also improving brand portfolio size. We'd like to see more brands come on stream. We're already seeing that with the Snap. We're seeing that with Dubig. So yes, we're
Let's talk a bit about those that you think are probably going to be laggards, even from on the fundamental rating right now, even though we say everybody is a sell at this stage, given the straight valuations. But it seems to me that PZ is perhaps one that is the most challenged amongst all the names that you cover.
Yes. For PZ, I think the major thing there is segments. So when you look at Unilever, their closest competitor, you know, they're not exposed to white goods, but PZ is about 30% on average, you know, of revenues come from white goods, and that's electrical appliances, and those goods are really cyclical. So when there is a hit in consumer spending, those revenues from that segment, you know, would drop, and of course, it's 30% is not small. So yes, they're affected by that. But one thing we also see with PZ, we expect to see improvement in cost of sales. Last year, we know that management, the parent company, had come out to say that they were adopting a supply chain optimization strategy. The previous year, we actually saw cost of sales really put pressure on margins, and they identified that issue, and they've said, okay, we're going to focus, you know, on trying to optimize our supply chain, improve cost of sales through economies of scale, and we're already seeing that trickle in. Most of their input prices or inputs, are from petrochemical products, and petrochemical products actually track oil prices, and oil prices we expect to remain at this elevated levels. So for them, I think starting the strategy at this time is really going to pay off for them. Unilever had already started theirs quite earlier, and you see that pay off, you know, somewhat. And
we really have to leave it there, but thank you so much. And like I said at the top of the interview, you may rate them a sell, but I don't think anyone is selling anytime soon.